All right, this is gonna be quick. Preparing for next week. So to be honest with you, I'm looking at a few different things here. Just strictly going based off technicals right now. It is Saturday, I believe. What? August 9th. So Monday will be August 11th. Anyways, yeah. So I'm looking at a few different things. Definitely the semis. SMH actually is what I was just looking at. So the semiconductors ETF, it's looking very bullish. We've breaking structure up here to the upside. We've had a clean break and retest. We've obviously been consolidating at these highs, obviously creating all-time highs as well. So I'll definitely be keeping an eye on that. I may do a small move on Monday, something small, just to kind of see where we're at and what we're looking like. But Mondays, especially if I'm swinging, it just depends on if we want to have that fake the break back down to the downside. But it's just something I'm keeping an eye on. We have to keep in mind that we, just had all-time highs. We have breaking structure back to the downside on the smaller time frames here. We have these many swing lows from the prior week within this little channel, right, back and forth. We literally have a high, a low, high, low, high, low, and all these lows and highs are actually going to be at like support and resistance. And then we have the break, right? People are chasing, buyers are chasing, and then we have the fake out, back to the downside, and then we have a little bit more consolidation. We made clean highs, a clean, double bottom for the most part. This is on the 30 though. Like I said, that was more on the micro. And then on the 4 hour, it looks a little more clear on what I'm exactly looking at and what I'm looking for. So we have that double bottom. We have that break. So we have the higher low, higher high, higher low. This is the next leg up, right? So on top of that, we did close the week. We did close Friday up above this resistance. So at this point in time, I'm actually looking for us to potentially break the all-time highs. I don't want to be bearish necessarily due to the fact that we are in a bull market, so there's no reason for me to really be looking for any sales or any shorts as of right now. So kind of looking at the smaller time frame, we are pretty much on the line of support and resistance, right? Prior resistance, potential support if we want to kind of take that next leg up, which is what I have here. So if we see a break, then we have to trade accordingly, right? We can't just say this is going to happen and that's going to happen and this is what the trade's looking like, and we can't have one scenario. We have to have two different scenarios, one being the bearish side of things and what we're going to be kind of looking for and expecting if this were to happen, kind of like simulations. And then obviously a bull case as well. So as of right now, I am looking, and honestly, with the weekly close, I'm looking for a push to the upside, back toward that all-time high. But with my strategy, especially if I'm swinging, for the most part, I do not like to go long at highs. Obviously, where you really would want to have gone in long would have been down here at 282. Just because looking at the data, it's like, come on, sweep the highs up here. You kind of have that like manipulation, accumulation back to the downside, and then potential distribution. So it's not an A+ setup is what I'm saying. So you may want to just look for a scalp, or just a small trade to the upside on Monday. So nothing too crazy there. Definitely something to consider and something to look at. I think Marvell has a lot of potential moving forward. I think the break to the downside at $67 was a really good move. Now looking back at it, right? So we have the higher highs, higher lows. Obviously, we're in a reversal in a V-shape type of recovery as well. We did have that pullback. The stock needs to take a breather. Nothing just goes straight up. Nothing goes straight down. So in this case, we did have that breather. Faked out the sellers probably multiple times, right? Faked out buyers at the break and retest here. Did a little bit of accumulation. If you want to call it this, it's a slight, on the hourly time frame, probably an inverse head and shoulders. back to the upside. So we've created that higher high, created the higher low, we've accumulated in this area, and now I'm really looking for this to make that next leg up toward 85, 95 to $100 in the following months. I'm actually in a trade right now, so like 1 month, 2 month, or 3 month timeline is what I'm looking at, but I will roll my contracts accordingly. I have my TP1 right at 78, 80. If we see a break above 80, I obviously want to see some sort of quick movement between these sections. Definitely a breakthrough this red zone, and then a breakthrough this zone very quickly, and possibly between 80 to $86, a little bit of a slower grind up, but what I would like to see is just up and to the right, so if it's a little bit slower, I'll most likely roll them out even farther, especially if we break through 81 and get to like 83 toward these previous highs. I may take some profits and then wait for a little bit, a pullback back down to 81, and then get back in again. Trim some profits, right? I'm not going to take everything off the table. I will trim, and then obviously I will look for that pullback to then roll my options to a later expiration. So that's what I'm looking at on Marvell. It's really not that complicated. The system in which I trade by is just a system that has worked for me over and over again. And honestly, you can kind of see the pattern as well here of what's going on. Inverse head and shoulders on that pullback, which would be the higher low, the higher high. Inverse head and shoulders kind of in the works right now. And honestly, if it doesn't work out, it would suck, right? We have to manage this trade accordingly. So I do have a stop loss at $71.33. That would invalidate my trade completely. I did buy expiration, or I bought out into middle of September, I believe, or early September for now, because if I see that, based on how I see the market open this week and finish off the week, we can actually figure out whether or not, or at least I'll be able to figure out how I want to manage a trade. We'll put it that way. So as of right now, I am not bearish on this stock. I think the breathers that it's taken are healthy, and I think this has a long road to recovery, which is why I like where I'm at and where I entered. And I think the potential risk reward is pretty big, considering I have a price target of $100 in the next 1, 2, 3 months tops, right? So that we don't know. We can't time the market. We can't time entries. We can only use what we have previously as data, whatever system you like to trade by. Definitely stick to that system and that strategy, and stick to the technicals. Technicals do not lie. Fundamentals can obviously move things short term, but long term technicals should remain the same. So never look at like the 15, 30, or even 1 hour sometimes. That's not going to necessarily put me in a position where I'm going to invalidate a trade based off the 1 hour. I would go based off a daily close, and based off my current expiration on this specific move. I'd even maybe rely more on the weekly close. So how we close next week is really going to determine whether or not I want to continue holding the trade. Obviously, if you hit my stop loss, you hit the stop loss. That would be very aggressive. From a 77 to 70, 72, 71. That would be very aggressive, and therefore I would have to take a loss, right? And if it did make that move pretty quickly, at least, I bought far out in the expiration. I'm not going to lose. I'd say I definitely wouldn't lose 100% of what I put on the table. And if I happen to lose, let's say 70%, I'd be comfortable with that. I actually, with this specific trade, my risk reward is like a 1 to 3, 1 to 5 potentially, based off what I've calculated. So even if I lost the entire the whole contract and it went to zero and went completely worthless, that would be completely fine with me, because that risk reward was not a 1 to 1, or at least right now it's not a 1 to 1. It's a 1 to 3, and potential 1 to 5, depending on which TP we hit at one point and at what point in time we hit them. So that's the breakdown there.